Awesome. So we got this recorded. Just jump right into it. I'm just going to pick like a random pair. I'm not going to mark it up or anything like that. I'm just going to show you simply just some basic stuff. Close these tabs so Google works a little bit better. This is UJ. For anybody that's any UJ trades, I mean, this is just in some mad consolidation. Quick little tip. If you're trying to trade this, I don't really see any direction in this pair. This is kind of ugly. This is all just bouncing back in between here. It's not making any stuff like that, but we will be going over that on market structure and then some other stuff. So daily chart. Cool. All right. So all right. So if you guys right click this little I don't even know what to call this little box will open up. So I'm going to go ahead and go to settings. And then this is where this is how you change all of the settings in TradingView. So on those little bars that you have sometimes when you see like on the 1 hour, see like these little lines on the chart. I like to have these on here just to reference to see from day to day. So like this could be Monday, this could be Tuesday, this could be Wednesday. So this is all one 24-hour period. And how you can change that and turn that on is if you go to session breaks, time zones and sessions right here. And then you click this little box. So we go ahead and just, I don't know why it's not letting me click that little box, but so I go ahead, you can change the colors. We can change that to red. And then if we go back to this chart, this one just kind of just helps me like with the flow of things. By that, I mean like when I'm marking up charts, I know that if these little lines on here that I'm on anything less than the daily or the weekly, because on the daily, the lines go away just because each candle is 24 hours. So now when I hop down to the 4 hour, there's going to be 6 candlesticks in between these little bars right here. So that's just how, that's like one little tip that I like to mark up. And then especially too, when I'm taking entries on like the 15-minute, it also just helps me visualize, what time session I'm in, like where I'm at. So right here, this is the end of New York session, beginning of dead gap session. If you don't know what dead gap is, go to my School of Charts Instagram page, and then you guys can get a little bit of tip on that. And then I'm not going to go too far into detail on dead gap. So you can see from bar to bar, it's 1 day, but these are all 15-minute candles. So I can really see, okay, this was yesterday, this is today, and then this is tomorrow. So what I'm going to show you when I turn these off, I mean, you can look down here, but I don't really know. Like, I don't know that this specific candle was the close of the certain session, or I don't know that this was the open of dead gap and end of New York. So that's why I like to have the little time zone sessions set up on my chart. I don't like to have them like real dark or anything like that. I just like to know, just reference them really quick. So just real light lines like that. And then when I go to the 1 hour, it's not bothering anything. It's not cluttering up my chart or anything. If you know me, I hate messy charts. I can't do charts when there's, 50 indicators on it, 10 Fibonacci's and RSI and support and resistance and trend lines and stuff like that. I mean, this what you see right here, I could literally just be trading off of this chart right here. That's it. So I think that's another big key for you guys. A lot of people in this industry trade with indicators and stuff like that. I'm not like that. I trade support, resistance, a couple trend lines or two just to help me identify the trend and see if there's a break of structure or a shift in momentum. And some Fibonacci. I mean, you guys have seen, hopefully you guys have seen the webinars that I've hosted and stuff like that. So that's how you set up these little bars on my graph. So whenever you guys see those, that's how you know that this is just one 24-hour session. So if we go back into these settings here, style, candles, I just have mine on set up like a little custom color. I like this green right here, the green on this candle right here, and then just red. Some people I know, Vic, likes his candles a little bit different. I think Vic's are like blue and black or something like that. I'm not sure, but you can kind of mess around with this. And then so for this one too, the price line, I used to not have this on. I used to just watch what the candle was doing. If you like to have that on, then you can. But you can turn that off with this little box right here. So see how it turns this on and off, this little line. I liked watching this because once I see it, again, just kind of like a visual thing when it's coming up towards like resistance or support, I really know like where price is at. So if you like that on, you don't like it on, your charts are a little bit cleaner without it, but it doesn't really bother me. It used to, but it doesn't really bother me anymore. I don't really know what this stuff is. I don't really bother with any of that other stuff. Theme, light and dark, that's how you would actually change the color of the background. And then again, just changing the candles and stuff like that. So scales, I haven't messed with this at all. I don't think I've touched anything on here, to be honest. Background, I have mine on the second one, so you can change this to white. I like the gray one right here. Helps me see the candles just a little bit better. This is a big one. If you guys are brand new to TradingView, you guys still got these vertical lines and stuff like that. Look how ugly this looks. You absolutely need to take these off. Look at that. How do you know where price is? Like if you're looking at a chart like this, like oh my god, that's disgusting. That's one of the most ugly charts I've ever seen in my life. So how you turn that off is right click, settings, background, vertical grid lines, and then I go and just completely just turn them off. Horizontal grid lines, and then I turn these off as well too. So I like my charts really clean, as you guys can see. And as I've said, scales text, I forget what this is. I just have mine on gray and scales lines on gray as well too. Watermark, I turned that off on, oh yeah, okay. So again, I don't really want that on my chart. So turn that off. And then, oh yeah, the little description up here, I turned all this off. This is just noise to me. I mean, I don't use any of this information, so I just turned it off. Open, high, low, close values, turn that off. And then symbol description, I don't really need to see this one right here because I know what symbol I'm looking at right there. So it's just another thing that you have on your chart that just doesn't really need to be there. If you like it there, then by all means, go ahead and do that. Show chart source only value. I didn't even think that's changing anything. So we're just not going to mess with that. Indicator titles, that will take away any indicators that you have. I have that, but I like to just minus that just because, again, I just like my charts as clean as possible so I can really just look at price action. Indicator arguments, I have these, but I know I turned that off again. It's kind of just noise. Time zones and sessions. This is also super important for setting up your guys' trading view so that you guys know when London session is. Go to your guys' time zone. I'm in Denver, but they don't have a Denver time zone session, so I just did Phoenix. We're the same time zone as Phoenix. If wherever you guys are in the world, go ahead and choose your time frame so it'll actually change the values down here. So you guys know that when it's 2 a.m. that London session is starting, or if you're in the UK, I'm not sure with GMT, but I think it's like 8 a.m. It was the beginning of London session. Correct me if I'm wrong, but then it'll actually show 8 a.m. down here when London session starts and everything. And date format, yeah, just don't mess with that. I don't think I've touched that. So I've changed the time zone, and then I like the session breaks, like I said. Sometimes I'll turn them off from time to time, but I really like them. It just helps me see where I'm at so that I know, okay, so this is the beginning of crap. So that I know that this is the end of New York right here, and then this is dead gap. It actually looked like dead gap has just ended. Dead gap is really just no session being traded. A lot of people will try and tell you that there's like 7 different sessions to be traded. Is really to focus on London, Asian, and New York. You just don't trade from 3 p.m. Mountain Standard Time to 6 p.m. Mountain Standard Time. So whatever that 3-hour gap is for you, the market doesn't really move anywhere. This one, what they do, I mean, this one's moving right here, but if you look, I mean, the first 3 hours of this one has moved maybe a couple pips. So dead gap, if you just go through, and this is what I was saying before in the chat, if you go through and actually highlight the different sessions, so highlight dead gap, highlight Asian session, and then you go and highlight London session, and then New York. So that was just kind of a quick thing. I'm just trying to show you guys how to set up TradingView. Looks like we have a couple chats. We should meet up, Natalie. That's cool. Okay, so you guys were also asking about the different tools. So my little tool pouch that I have is right here. All of these tools right here are really the only tools that I use. I have the Fibonacci retracement tool, a text box, so I can mark like higher high, higher low, or consolidation. So really just go through and make my charts really detailed, so I like to see everything on the chart when I'm marking it up. So I'll mark higher low or higher high or break of structure right here, or price tested 2 times, or double top on the 15-minute or something. Just some mental notes, just kind of so when I'm switching between time frames, I know that like a doji candle on the daily is probably going to be some consolidation on the 1 hour or the 4 hour. So the other one that I have is trend line right there. I turn a little angle tool on, and I'll show you guys where this all is. So if you go to the one right under this cursor right here, to this trend line, click on that little arrow. I have this one favorited, horizontal line favorited. I don't really use that one anymore, so I'm actually going to take that one off. I use a horizontal ray. I have that one favorited, arrow, and then also just a ray. And then I'll show you what those does. Arrows, I use these to show you guys like my predictions and stuff like that. So that's why I have the arrow tool. I like that, just to visualize where I see the market going. Cool. The ray tool is just going to be a ray. So unlike the horizontal line, it's just going to start wherever you put it. So if I move it back here, it's going to be starting from back here, and then if I move it over here, really just helps me. The reason that I use this one is because it helps me when I'm identifying trends that I'm not looking back like way in the past. A really big misconception that traders get when they're trading is that if support was made in like 1997, it is still support. You're right on that one, but that was like 20 years ago. So it's not going to be super relevant. And what the market makers will do is they'll actually come down and actually do like one of these things, and then just keep continuing the market, because all of the retail traders are buying right here. All retail traders are buying right here, and what do? They give them some pips, and then they take them back and catch everyone's stop losses. So that's why you really got to watch price action around support and resistance, is because the market makers act really funny. So even though you get a double, you can still have double bottoms and downtrends. That's why you really got to watch the structure. So when you can even have this go down and then retest and then keep continuing down like that. How many people would be buying on this right here? Because all the retail traders are like, oh my god, it's a double bottom, it's going to the moon. No, they don't do that. Market makers just slice right through that, retest. This is our entry right here for sells, because it looks like we're in a downtrend. I'm kind of getting off topic now. So quick little note for you guys. And if I'm going too fast too, just let me know. I can slow down for you guys. Cool. So the next one that I have is the box tool. It's going to be in this third one down from right here. So not the trendline one, not this one. That's where I get the Fibonacci, but I'll get to that in a second. I have the brush just so that I can mark up some stuff when we get on these webinars. You guys don't have to favorite the brush. It's kind of more just for me when we get on these webinars. I do have the rectangle because you guys know how I set my support resistance. So I will make a box like that. Right click, settings, go to coordinates. And then I always like to just send it to the future. And what I mean is just, this thing will literally just go on forever. This box will go on forever. So instead, if I have a little box, that's 15, so like that. I like to keep the zones relevant until they are tested again, which is a little bit more advanced. I wouldn't worry too much about that. This is just a habit that I've created, is just always just sending them out and then just end up deleting them or adjusting them if I need to later. So what I do when I set support resistance, I draw a box, send it out to the future, but I won't do that right now, and then I'll put a line like right there. So this is how my support and resistance looks. So we get the brush, we get this, boom, 2 taps, we get a 3rd tap, and then it comes down. So as long as it's coming up into the zone, and I see that price action is holding and I get some sort of reversal candles and stuff like that, this is where I'm going to be selling at. Because you can't, when you set these lines, price doesn't just come perfectly right to 26.28. It's going to come maybe to 30.0, or maybe right to like 26.0 or 26.5, or just like right in these zones. So I like drawing these rectangles just so that I know that once price gets to this area, this is just a critical zone that I need to watch. And I'll actually show you guys on a chart what I'm talking about. So next one again, I use, this is the arrow tool. I already went over that one. That short position. Okay, so here I'll go to the Fibonacci. I know you guys want to use this one a lot. Here's my Fibonacci tool, and I will go into my settings. If I'm going too fast for you guys, just type in the chat, just let me know, and I'll slow down. This is being recorded, so I will upload this to YouTube. So this is my Fibonacci right here. I like using the Fibonacci. I know Vic doesn't really like using the Fibonacci. Vic's just been trading long enough that he kind of just knows. You can, once you've been trading long enough, you can kind of tell what's a 38.2 or what's a 61.8, and what zones you want to enter or not enter on. So this is the Fibonacci tool. You're going to go right to the 3rd one down below this little cursor. So you're going to go right to, should look like a pitchfork. And then all of these, this is all just noise again. Go ahead and favorite the Fib retracement, and then you guys will have your little toolbox right here. So as you guys are favoriting these, you guys will start to collect your like little toolbox or whatever that you guys have. So I have the Fib retracement I already have undrawn, so we'll just go into that. So if you guys go ahead and draw a Fibonacci for me, some of you guys might have the original one with like all the crazy colors, like the blue, the green, the red, the yellow and stuff like that. The reason that I have my Fibonacci like this is because, again, it's the same thing that I like to have just my charts really clean. And this one is just some simple lines. And really all Fibonacci is just calculated psychological support and resistance. It's just a line that price comes to, and I don't know why it works. It just does. Some dude named Fibonacci came out with this stuff many, many years ago, and it works in everything, universal laws, flowers. It even works like Fibonacci ratios and stuff like that. So that's really all these are, just Fibonacci ratios. So what I'm going to do, if you guys have a fib drawn, what I'm gonna have you do is go ahead and click on the Fib and then right click on it. So you should get this and then go to settings and then go to style. So now you should have the Fibonacci settings pulled up on your guys's screen. So this is how I have mine set up. I forget what the exactly what the other settings are on the original Fibonacci. I got rid of the trend line just because when I'm watching price, I don't want there to be anything to distract my bias or anything like that. So I get rid of the trend line. I don't need it. And then this, these are my settings right here. That I'll just have it on the dotted one. The levels line is just a straight line. You can change this too. I actually kind of like that. I might start playing around with that, but we'll keep it. We'll keep that for now. I have my Fibonacci levels. I have the 0. I have the -27. I have the -61.8, 38.2, 50, 61.8, 78.6, 100, 110%, and 120%. These are typically for stop loss levels. Although I've been practicing and using some techniques with setting a stop loss level at 78.6. So once I see price come to 61.8 and I start seeing some reversal candles back in the direction that we're planning on trading, I will go ahead and set my stop loss at 78.6. If you want to use a really safe stop loss, you set your stop loss at 110%, or you set your stop loss at 120%. Again, I've just been practicing some techniques that I use the 78.6. It's a little bit better risk reward ratio. So if we get an entry off the 61.8 with a stop loss of 78.6, first take profit is always 0. And so it looks like just in this trade alone, the risk reward ratio would be 3.3. Second take profit would be -27 for a risk reward of almost 5. And then our third take profit, price doesn't always have to reach this, but if you don't have a stop profit set in place by at least the 0.1%, I always move a stop profit when I'm like 23, 24 pips in profit, just in case price reverses or whatever, anything accounts for something that we missed. For up 24 pips, I'd much rather take a break-even trade than just take a big L. So coming back to this, so first take profit set at 0, second take profit set at -27, third take profit set at the -61.8. So you can see that that's a pretty good risk reward ratio. If we enter off the 61.8, stop loss at 78.6, and then if it hits our take profit at -61.8, this trade is almost a 1-to-7 risk reward ratio, meaning that if you were to risk 10 pips, you'd be going for 70. So the benefit to that is that you guys can increase your guys' lot size while still only risking 3 to 4 to 5% of your account. If you're just starting to trade forex, I would only advise for you to trade risking only 2%. I know you guys are going to get greedy and stuff like that, because I was greedy when I first started trading and just blowing accounts and stuff like that. I think I blew 2 accounts first 3 months that I was trading. So it's okay. It's just lessons. I've had to learn everything, but I don't just say 3% risk just to be cute. There's actually rules to trading and stuff like that. Why I say 3%. So if you're risking 3% of your account, I believe you should definitely be aiming to make at least 6%. So a risk reward ratio of 1 to 2. So I blew my $1,000 account in the first 2 days. Yep. So I mean, if you've been trading for a while, it's gonna happen. I mean, that's just the tuition of trading. So that's what I like to call it. It's just the
It ain't shit.
Yeah, you pay $40,000 to get a college degree. You blow some accounts to learn how to trade. So it's kind of just a gift. So hopefully you guys are starting off with little accounts and just practicing the skill set. or hopefully you guys are still on demo if you guys are brand new, and everything like that. So these short positions and long positions, I'll show you guys how to set these up. These again just kind of help with like visuals and stuff. So I can see like what trade I'm in. So this right here would be a long position, and this would be a short, red being our stop loss area and green being our take profit area. Same thing for the long. And you can find this tool right under whatever this thing is, XAB, whatever pattern that is, and you can find that under this one right here. So go here, long position, short position, go ahead and favorite these. You can see if I star this, it adds it to my toolbox and takes it off. So you can also move things around on your guys's toolbox. So this is literally the only tools that I use: Fibonacci, text box, trend line, array. It's just a trend line that just goes forever. So I like this one when we're using like daily and 4-hour stuff, just so you don't draw a little trend line and then you have to constantly keep adding to it and stuff like that. I just draw one ray and just be done with it. One thing that I have been kind of playing around with was just noticing the angle of the trend lines. I noticed that if the trend is looking like this, that it's probably going to pull back pretty hard. It's going to break this trend line. But if the trend line is maybe looking more towards like this, the trend is maybe going to be looking like, something a little bit more slower, moving like that, till we get a break, retest. So. Cool. All right. So I think we only have about 7 minutes and 30 seconds left on this webinar. What I'm going to do is I'm just going to go over some market structure with you guys, and I think that's pretty much everything how I set up on TradingView. One more thing that's been another key for me is this little tab right here. So this is my little watch list. So I go in here, I can add a symbol, a JPY. I haven't marked this pair up, so I don't know. I'm just showing you guys. CAD JPY. If you see a good setup, so let's say, so this is a perfect example. So USD JPY, like I was telling you guys, has been consolidating for a bit. So I didn't have this one marked. I didn't have this one flagged. So I only flag, so make a little flag like right there, if I see really good setups, and those are the pairs that I want to focus on. So I'm watching like 10 different pairs or whatever, and then whatever's flagged are the pairs that I'm planning on taking trades on. So whenever you see a little flag right here, these are trades that I definitely am looking at to go in on. So CAD JPY, and then you just leave it like that. So I don't use any of these other things. I don't think I've ever touched any of this other stuff. Maybe I'll dive into that one day, but not today. You guys can see the reason that I use the angle for the trend line, like I was saying, so let's say that you have a trend that's like 30, and let's say you have a trend that's like 57. This is just an example. It's not, and again, I've just been testing this too. So I'm just trying to see if I can see like some sort of pattern, but I have noticed that the trend lines that go like this are a little bit slower, and they're a little bit more what I like to call safe. So these ones, if trends are moving like just crazy, just like straight up like this, that kind of tells me that this is going to be exhausted pretty quickly, and I should be looking for break and retest to enter. So the only reason that I use the angle on the trend line is to kind of just gauge the aggressiveness of the trend. The steeper the trend, the more aggressive that it's going to be. The less steep that the trend is, the less aggressive that it'll be. Cool. So now we can get into some market structure stuff. This is kind of what I go over in my book, but sometimes people just like to see it on a screen. I will turn it on. So I will just do an uptrend for now. Okay, so take a picture of this if you need to. I can actually send this in the group. If you guys would want me to send this in the group so you guys can just save it to your phones or whatever, you can let me know in the chat. If not, I can delete it. So this is how the market moves. In an uptrend, it makes higher highs and higher lows, and we are going to be looking for buys because we're definitely not be looking to trade against the trend. So the higher low is always where we want to buy the currency to give ourselves the best and most safe area to enter the market. So this is the reason why. So if you're buying higher lows, confirmed higher lows, that is, your risk reward is going to be a lot better than if you were just to buy at the higher high. Because now what we're doing is we are increasing our risk and decreasing our take profit. So now what a risk reward ratio of 1 to 3 was would now just be 1. So with market structure, it's you always want to be looking for these higher lows and to always be buying here. And then again, ceiling right here has become a floor right there. So this is where we want to buy. This is literally like how I trade. As soon as I see a ceiling become a floor, I'm looking to purchase this currency until the trend reverses. So what I mean by until the trend reverses is you get this double top up here. So you see this resistance, we have this double top. All right, cool. So this is what I was saying. So ceiling becomes a floor. Be looking to purchase currencies. So this one right here, it's not the prettiest. Just bear with me. So kind of, I had this little dipping down right here, but that's okay. Even though, so this is a little bit more advanced, but once I kind of see price starting to get exhausted and stuff like that, or just near like reversal zones, I it's kind of just trading intuition. It just comes with experience, comes with back testing. This meeting is about to end. What I'm going to do